Okay, hi everyone, hi everybody. Sorry for the delay. I am 5 minutes late because I had a problem with the connection with the server, but now here we are. We are live. My name is Antonio Bosco. I am an Italian channel owner for BUX. My channel is called Principi del Forex.
With
and
the connection with the server, but now here we
and
are.
now,
We are live.
sorry, I had
My name is
some
Antonio
other
Bosco.
issues here with my YouTube video. Okay, I hope everyone is here. Everyone is live. So, as I was saying, my name is Antonio Bosco. My username on BUX is Bosco with two S, so BOSSCO. And I deal with charts, with technical analysis, and with Forex, basically. So, what will this webinar be about? As the title already says, and as you already know, is about basics of trading. So the basics of trading, so how to read a candlestick chart, basically, how to recognize a trend, which are the means which help us to recognize a trend, and so on. This is a webinar already held in Italian 1 year ago, more or less. It was quite more extended. Now we have less time, so will be kind of reduced. Let me say, okay. So if you have any kind of issues, so you can write and text on the chat or the YouTube video. So here we are, and now let's start to prepare a brief PowerPoint presentation with the things I'm going to talk about. Maybe this is a PDF you already have because someone already shared on the international groups. So here we are, basics of tradings. So as I mentioned before, we are going to start with PowerPoint presentation on how to read the candlesticks charts. So let's start. How to read a candlestick chart. The first most important thing to consider in a candlestick chart is the time frame, of course. Why? Because the time frame indicates and represents the period of time which is represented by a single candlestick. So we have many candlesticks in a chart. Each candlestick represents a period of time, and this period of time is indicated by the time frame. Okay. For example, if we see maybe one candle and let's say our time frame is daily, we have a candle which summarizes the movement and the fluctuation of the price within 1 day. Okay, so if we have, for example, a candlestick with a time frame of 1 hour, the candlestick represents all the movement and the fluctuation and summarizes so all the movement of the price within 1 hour. Okay, so if we want more details about the fluctuation of the prices inside one chart, let's say, we can reduce the time frame and have maybe more detail about this. Let's see some candlesticks. So these are the components of a candlestick. We have here represented two different candlesticks, a green one and a red one. So the red one is a descending and negative candle, while a positive and uptrend candle is the green one. So as we can read here, a candlestick is made of two components, so a body and a shadow. Here we have the body is the middle part of the candlestick, so the full one right in the middle, and the colored one. Okay, so the color helps us to understand if this is an uptrend or a downtrend candle. And shadows, which are these lines here at the end of the candle. Okay, the body represents the opening and the closing of the session. Okay, so let's imagine here we have a 1 day time frame, so a daily time frame. This is a candle which summarizes all the movement of the price in 1 day. So in a green candle, the bottom of the body of the candle represents the opening, okay, the opening price of the candle. Why? The top line, top part represents the closing. So here we are that at the beginning of the day, because the session is daily, of course, at the beginning of the day, here we have this opening at this price, while at the end of the day we have this closing. And during the day, the price reached a minimum of 1.13 and a maximum of 1.1360. So this is the information given us by the candlesticks. So the opening, the closing, the minimum and the maximum. When the candle is red, of course, the opening and the closing are switched. So we have the closing on the bottom of the body, while the opening is on the top of the body, because here the price opened, then the price during the day, we don't know why, at what time precisely, reached this maximum. the price went down, 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 down. We don't know when, we don't know what time, but reached this minimum during the day, so during that session, and then reached this price and closed at this precise price. So this is the information given us by a candle. And now, before going on, I would like to ask you if you have some questions about this of any kind. So you can text me on the side of the YouTube video. I will answer to everything. So please do that if you have any kind of questions about this, and I will go on. I hope the connection is good and you can hear me and see me properly. If it's not like this, please tell me, so I will try to fix it somehow. I don't know why still, but I'm giving you some time to ask something. If you don't have anything to ask, I will go on with the next topic, which will be also important, maybe the most important thing to consider when we are trading. So when we are dealing with a specific operation in the markets. Now we saw how to recognize a single candlestick, a single candle. What is the information given us by a candle, and what is, of course, the meaning of a candle. But before going on, so with the next topic, I will leave you time to elaborate if you have some questions. Before going on, I would like to switch to the charts and maybe let you see, for example, our euro dollar chart, daily chart, okay, with the normal candles, because there are many kind of candles we are going to see later in a few minutes. So now let's switch to the charts. Okay, as you can see here, we have the euro dollar chart. This is a daily chart. That means that each candle represents the movement that the price made in one day. So this is summarized perfectly by a candlestick chart. Let's zoom a bit just to see it closer, from a closer view. Okay, this is the today candlestick. I didn't tell you one important thing. When we are with a current candlestick, so with a candlestick with a session which is still ongoing, so it's not closed, it means that the closing price, which can be the bottom or the top of the body of the candle, it depends if the candle is green or is red. So the closing of the price is, of course, represented by the current price, because the session is not closed, so we cannot have a closing price, but we have a current price, which is, let's say, represented as the closing price of the candle. This is a very interesting candle, the one of today. This is kind of doji candle, but we will see maybe another time. That means that the closing and the opening price are still at the same place. So in a very similar place, they are very close to each other. Now here we are on invest.com, which is a great provider of graphs, charts. If you go on the candle, here we can have on the top all the values of the high, the low, the opening and the close of the candle. We can see that the open was at 1.1341, while the closing, which is not the closing, is the current price in this very moment, 1.1338. Okay, it's slightly lower, but while I was talking before 1 minute ago, it became green because the current price overcame a bit the opening price, so it became green for some seconds. Now it's yeah, right now, for example, okay, yes, right now it became green, and now it's red again, okay. And we have also here the low and the high, so the minimum and the maximum of this candlestick. The minimum is represented in 1.1316, while the maximum is in 1.1357. But we can see here some closed candles. Okay, so for example, the candle of yesterday is this one, which opened at 1.1335, which is this level here. It closed at 1.1339, which is the other one. So it went down. That's why the candle is red. It reached the minimum. We don't know when, in 1.1320, and a maximum in 1.1366. Okay, which is this level. But what if we want to know, if you would like to know when, exactly when, so at what time precisely the price did this fluctuation, the price reached some this kind of price, these prices, then we have to change the time frame and to reduce the time frame particularly. So, for example, if we go here in a 1 hour time frame, okay, let's just see the candles of the movement of yesterday, okay. this one, we can see that the maximum has been reached here between the 7 p.m. and the 8 p.m. Okay, so the maximum, which is here 1.1362, was reached between 7 p.m. and 8 p.m. and these are all yesterday candles, while the minimum was reached in around maybe here. Okay, this is yesterday. Okay, between 1 p.m. and 2 p.m. No, this is 2 days ago. I bet. Okay, so this is the meaning. Okay, if we want to know more detail, if we want to go even in more detail, we can also, for example, go for a 15 minutes candlestick chart. Here, every candles represent the price, the movement in 15 minutes. We can also go in more detail with 5 minutes and so on. So we have very different kind of time frames, and each one gives us some detail. Whites prefer maybe some higher time frame because it gives us an overview, a more general overview, a more universal view on the price. So here we can see more precisely what the price is doing and what's the trend. But now, just now, right now, let's switch to the next topic, which is, of course, the trend, which I told you about before. So now I would like to switch again to our PowerPoint presentations. Still don't see questions, so I can go on perfectly. So let's switch to our presentation. We have seen right now the candlesticks chart. Let's go on with the trend. So what is a trend? A trend is the direction taken by the price net of its fluctuations. Sorry. That means that prices have fluctuation, of course, so it may go up, down, and so on, with maybe a cycling movement and so on. Of course, a trend is not always smooth, completely smooth. Otherwise, everyone who trade on the markets will be rich. Okay, of course. But there are some fluctuations which sometimes are predictable. So if we take away this fluctuation, the trend is the direction taken by the price. We have three kinds of trends. So it's not two kinds of trends, it's three kinds of trends. Why? We can see right now. An uptrend is characterized by increasing minimums, more or less increasing minimums. Okay, we cannot have every time all the minimums increasing. Okay, that will be impossible. While a downtrend is characterized by decreasing maximum. We will see perfectly now with some example. Why I said three kind of trends? Because it can also be no trend on the market for a certain period. That's called lateral market. And it's very important and fundamental to recognize lateral market, because some lateral markets can give also as a message, maybe a warning. While an uptrend can tell us, okay, buy, while a downtrend will tell us sell. A lateral trend, so no trend on the markets, can tell us stay out of the market. So don't open position. And this could be also a very important and useful message. These are these are examples of trend. We have here a downtrend with decreasing maximum. Of course, not all the maximum are decreasing, as we can see here. You have also increasing maximum sometimes, but the tendency is decreasing maximum. This is an uptrend, so with increasing minimum, same thing. So not every minimum increasing, but more or less. Well, we are here in a no trend situation, so lateral market is this. What if we switch to our chart right now of euro-dollar chart here? So can you tell me what kind of trend is this? You can maybe text on the box of the video. You have time, so take your time to answer. Of course, if you are new to the trading world, this is a webinar mainly meant for someone who's new to the market, new with the charts in general. So tell me, what kind of chart do you think this is? And I will maybe sorry, I don't know with my throat today. But I will tell you if it's right or not. So let's go on. Let's move on to the means which help us to recognize a trend. We are already running out of time, so I'll try to be a bit brief. The first one is the Heikin-Ashi chart. So Heikin-Ashi candlestick chart is a very useful way to recognize a trend at a glance, because they look like normal candlesticks, as we can see here. They are built in a very different way. So the colors are much more homogeneous. So it's more rare to see red, green, red, green, red, green. But how we can see here, it's red, 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 some green, and then red, 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 red again, which tells us this is a downtrend, okay, because it's everything red. And trend is smoother, okay, and the gaps are removed. The gaps, we have a gap when the price opens a session with a price which is totally different and very different from the closing of the previous session. So it doesn't show most of the fluctuation, just the most important fluctuation, which in this case are these ones. But this is the same trend we saw before here. This is downtrend. This is the same downtrend with the normal candlesticks chart, while this one is a downtrend with Heikin-Ashi chart. So we can see that it's smoother. At a glance, it's very, let's say, it's very easier, okay, to understand which kind of trend it is. Now we can show, for example, an example on the charts. So let's go on. Okay, let's just answer to who said hi. So to GT Zombo and 04420. So hi, thank you for following me and to watching this webinar. Nobody answered to the question, of course. This is, let's go again on the charts. This is a lateral market situation, so we have no trend clearly now here in the current euro-dollar situation. So there is no trend. Maybe could be better also to stay out of the market if one day is your if the daily, so this daily operation are your kind of operation. Okay, we will talk about also trading strategy, where maybe in another session, another time, because we are already running out of time. I got 3 minutes left, but I will never make it, so I will go over as my usual. But okay, so let's move to the charts. Let's see maybe another, I don't know, another instrument we can trade on the markets. For example, we can see Facebook. Okay, I don't remember perfectly the trend of Facebook, but just right now I can show. I'm showing you. Okay, so this is the Facebook title. Okay, here we can see a gap. I was talking before about gaps because we have a closing position, a closing closing price of the session here of the 30th of January at 150.42, while the following day, so next day, 31 of January, it opened at 166.60, so very different price. We see here lots of fluctuation, we see here a lot of gaps, we see lots of noise, so it's white noise everywhere. How to remove this white noise and how to remove this fluctuation which disturbs the trend with the Heikin-Ashi charts, which is this one. Okay, the first things we see is that the gap has been eliminated, as I told before. So this was the gap and it's been eliminated. There's no more white noise on these charts, just a bit of white noise. But why? Because here we have a lateral market situation. Because if even the Heikin-Ashi charts are alternating between red and green, that means that we have a lateral situation. Okay, this is maybe an alarm for the lateral, the main alarm for the lateral market situation. But mainly this was an uptrend. Okay, we could see here this uptrend because this green, 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 green. But now we have lots of red Heikin-Ashi candles, one after another one. Every of them is red. So Heikin-Ashi charts doesn't help us only to understand and to recognize the trend, but also to understand when there is an inversion of the trend, a changing in the trend. Okay, so now we see lots of red candles, one after another, Heikin-Ashi candles. That means that has been an inversion in the markets, and the trend is going down right now. Okay, so the trend has changed. If you were in a long position, you could close that long position right now, or maybe if you had no position open, you could maybe think about entering the position in Facebook. Seeing this downtrend, maybe you could think about going short in Facebook. Okay, so this is maybe a very useful example according to me. Now let's go on and let's see another mean. Okay, so we are definitely out of time, but that's it. We have some other ways, and this is the trend line. Okay, so the trend line is a line, as the name already says, so it's a talking name, which can be drawn on the maximum or the opening of the candles if we are dealing with a downtrend. Why? It can be drawn on the minimum of the candles or the opening if we are if or the closing, sorry, no, or the opening. Okay, I was saying it's right if you are dealing with an uptrend. Okay, this we can see here in the same trend as before. Okay, I choose it as an example. It's a very narrow trend, but the trend line doesn't have to touch every candle as we see here, because when there are many fluctuations, we can touch only few specific candles, strategic candles, which help us to recognize a trend. You can use both Hikinashi or normal candlesticks to draw a trend line. I prefer personally Hikinashi because I have two ways to recognize a trend, two means to recognize a trend. But you can use also normal candlesticks, there's no problem about this. So these are kind of trend lines we can see is on the charts. Now I already know what chart to show you, and it's the cable. Okay, this is the cable chart, so it's pound, British pound against dollar. Now I'm going to show you. Here we are. Okay, so what can you see here? This is Hikinashi candlesticks with a trend line. Okay, here we could see a very great downtrend, but of course this is a trend line I drew after I saw how it was going on. Okay, what was happening right there? Not right in that moment, not right now, because I would have drawn a different kind of trend line. But here we have a trend line which touched only a few candles, 3 or 4 candles maximum, but it supported the price in its downtrend. Now what happened here? Okay, sorry, I'm moving. I don't know what I'm doing here with this chart. Okay, instead of moving the chart, I move the. Okay, never mind. So let's go to the charts. Here we have this downtrend. You can see it better right now. What happened here? Here we had a breaking of this trend line with of this downtrend line. So the trend line was broken, and this is one of the means, one of the signals for an inversion, so a stop of the trend. And we can see here, we can see that maybe a new uptrend, so a positive trend is rising. Right now we can also draw another trend line starting from here, touching the minimum, which are increasing, and the most of the Hikinashi candlestick are green. So we can say that maybe here a new uptrend is just born. Okay, so this is for a correct use of the trend line, but of course, I know this is a very tricky mean, and it's very complicated also because many persons sometimes ask me, okay, so how do you draw a trend line? What are your rules to draw a trend line? What are the universal rules to draw a trend line? There is no universal rule, so you can draw a trend line whatever you want to, however you like it. Touching the minimum, touching the opening with the Hikinashi candlesticks, with the normal candlesticks, and so on. Of course, there are some kind of trend line which are more maybe risky, but the gain is higher, the possible gain. Some kind of trend line which are less risky, but of course we could have less gain with them. Okay, so let's go again with our presentation. Um, of course, we didn't have so much time for this. We are run out of time, of course. But now is the Q&A time. So if you have some question and answer, I will be glad to answer you about everything right now. So just see if some comments. Okay, 420 just said about, I guess, about that the trend we were seeing before. It says slightly down. Okay, I may agree about the slightly down. It was maybe more down than up, but when it's so slight, the difference, I would say that we are in a lateral market situation, so in a no trend situation in that moment, because of course, maximum minimums, they were mainly the same, okay, I would say. So thanks for watching these videos. I can leave you some more moments to ask questions, but as I say, I'm out of time for this, and I'm very sorry about this. But next time, maybe if this video will be successful, maybe there will be enough views. I'm very glad to do that and to maybe hold some more webinars. So thank you for watching it, and see you next time. Bye and